Now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. And it looks like Bitcoin is having a little bit of a breakout right now. Is this a sustainable move? As it stands on this Coinbase chart, we are attempting to reclaim the 30,270 level on the 6-hour time frame. We closed out some candles above that level and are starting to potentially come up to reclaim 31K perhaps. Let's go into the liquidity and not waste a single second of your time as we see what is pinged in as we speak. So as we speak, they are coming back into eating some of the short liquidity at 30,799, 118 million removed.
Fatality.
50x characters now taken off the table, while pinging in some longs at 135 million in this breakout as they buy in to here. 72 million in shorts, 85 million in 100x up here that are pinging into, as opposed to the 81 and 135 in longs. There's more long imbalance as they clear the shorts. Are they going to come back and gobble up the longs thereafter? We'll let this percolate just a bit. So as it stands, we still have more liquidity up at 30,976 that it could come back to in 50x terms. There is some stacked liquidity up in this region from this range that has been forgotten to Father Time. It looks like it's evenly stacked if it does choose to clear some of this 50x and come back down after. The 50x pools do start to dissipate up at the 31,316 region. Do they take out all the 50x and reconsider? It all depends on what type of liquidity they ping in here on the longs. Let's go into the higher time frame and not waste a single second as we expand our vision here on high block. What is high block? Well, people lock their liquidity in the charts to get burnt to crisp by the market maker, and we get to see where those crispy characters are, as we just saw on the 1 minute time frame. So we're going to go expand our vision to the external pools on the higher time frames, which is like 7-day and up. So let's go to the 7-day and see what was lost to Father Time and what is being reclaimed as we speak. Zooming in here, we took about $1 billion off the table at 30,750. There is another $500 million up at 30,850. The ultimate target, if they were going to clear this range, is up at 31,350 at $4 billion on the 7-day time frame. After that point, then you do have that levels down below to come back to in the 29k region. They did do it before, and they might do it again, as they did here and in the past, which is lost on the 7-day time frame last week. So if we go to the monthly chart, it looks like we have overall more liquidity down below than above on the monthly time frame. The thickest band in the immediate region is at 31.7 at $24 billion, and also the 7 billion at 31.4 and 6 billion at 31.2 if we are to come back to this. Not so much on the monthly time frame in the range all the way leading to 31.7. There is more leading down below sub 30k, particularly double digits at 29.4, double digits at 29.3, double digits at 29.2, double digits at 29.1. So we have 12 billion, 12 plus 13 plus 15 plus 16 plus 16, 16, 15, 13, 12. So 10, 20, 30, 40, 50, about $70 billion down below here at 29.4 to the 29k region, as opposed to the 24 billion up at 31.7, and you have 15 billion at 20, 30, 40 billion up to 31.9 on the monthly time frame. Where does this external pool start to change the narrative? Well, on the 3-month and the 6-month, there's also an imbalance to the downside. We've ascertained this over the last few weeks rather, but basically in the immediate time frame you start to see this pool of double digits up at 32k. It starts to look a little bit juicier on the upwards narrative path when you see the 50 billion and the 50 billion at 31.8 and 32 even. You start to see why it might be wanting to come up into this region with 40 billion all the way with double digits leading up the path all the way to 33.6. Now overall, I think the bullish structure is the play to be had. Earlier today we did put out the idea of the 15-minute possibly banging on you in the narrative structure of the indicator suite that we use, having these 4 time frames oversold and just playing these alarms at face value, and seeing the fatigue on 4 time frames here and breaking the bullish the bearish trend rather, and then starting to kiss the cloud, reclaim it while it's thinning. This is your entry point here, surging up to here and watching to see if it kisses the cloud again, which it did, and start to come out here. Are we starting to see a breakout above this zone? It started to meander around and break down out of this, making a potential fair value gap. So we're going to see if this holds the region and goes above on the higher time frame. So let's go to the 6 month. Shout out to everyone here. Booyah, 𝗥𝗲𝗹𝗁𝗵𝗲𝗀, what's up? 4 hour looking good. Chilling for now. My 2 cats love your stream. Thanks. Yeah, my cat comes in and bothers me occasionally, but she's welcome at times. Sometimes can be a little bit too much. So here we go. Let's see the higher time frame. We're pinging in more longs to shorts here. Another 116, 135. There's $200 million pools being entered it for the longs as opposed to the shorts as they clear this region. If they come up to the 30,976 region and they keep pinging at this rate, they may do a sharp V-shaped on some of these 100xers. No guarantees, but we've seen it before, particularly on the 100x. So as we look at the 6 month, you also see the liquidity screaming down at 24.6. We played with the idea, are these market maker positions, because they did allow 94 billion and 100 billion to just go unscathed as they came out from 24k, and then now those 100 billion have turned into 163 billion and 143 respectively. But if you just look sheer liquidity, there is more sub 24.6 than there is above. So once they start to spawn some of this, or take some of this liquidity up at 32.1, the 100 billion at 132.1, or 86 at 31.8, does it start to spawn some divergence off of those characters, bearish divergence, and start to retrace. Now if you start to go to the furthest external liquidity pool, which is the 2 year, you can see that there is $165 billion at 32.4, 157 at 32.8, and 179 at 33.2. So could we come up into this 33.2 region? Most definitely. On the external pool, it calls for that. Coming down to sweep the lows and take out 29.2, 74 billion, and 42 billion at 28.8 would give a more sustainable move to claim a majority of this first. As it stands right now, all of the longs that have positioned themselves here are now in upwards of 74 billion at 29.2 and 42 billion at 28.8 on this 2 year time frame. So coming back to stop that if we are going to go out, and also giving the impression to these guys moving their stops into profit, it could knock out some of these traders down below at 24.4, which is $229 billion down at 24.4, the hottest pool yet. And then also we have a pool down at 15k at 200 billion as well. So the entire, if you take the entire range, while it is mighty hot up above, after you clear 33.2, I don't really see much more interest being generated in the immediate without coming back into some of this. So could you, the highest you go at 33.2, do you start to then spawn some bearish divergence and retrace to until the halving? I don't know. Let's go to the monthly time frame one more time and then start to look at the momentum with the fibs. Shout out to everyone here as we go into the Binance chart. So we are breaking with conviction above this zone. This is the zone we were looking at, the 236 entry model for bearish and bullish trend-based fib levels. So as it stands right now, you are negating this 236 entry for the short. We did talk about the idea of entry if you come beneath the 236 at 30,619, which we did. So you could have taken that for a good %1.25 nearly. And it looks like this could have been a 618 bounce here if you draw impulse to impulse here. So the impulse was here. This was a deep retrace. Yeah, it looks like it came into the 706, almost into the 786, and started to come out from there. Previously, we came up to the 706 of this impulse and rejected twice off of that and came back down on these local fib levels. Okay, so this is also the bearish trend-based fib. So this bearish trend-based fib is that 236. The bullish one is for 30,724.30. So if you start closing out candles with conviction above 30,724, then we could be slated to come up to these regions that we talked about on the external liquidity range, particularly most notably that 450 billion up in that 33.2 region up in the 706, and possibly slated for more if people get starts shorting like mad up in that region. So seeing this conviction hold or not is the question. We're going to see what type of liquidity is pinged in and zoom into this. My contacts are dry right now. Let's go see what's going on here. We just cleared all of the 50x. $116 million pinged off that candle right there. Technically more longs than shorts, but not super thick bubbles like this 222 million. They've fatigued a little bit of the longs from this. The people that FOMO'd it here aren't feeling the FOMO as much. Their accounts are hurting by this time now. Let's go to the, let's start to throw on our momentum indicators and see what's going on with the momentum. Heads up display on. Link in the description for more. Scroll down to features. You can toggle switch these things if you like, or look at each component as we go over it and read about the trend cloud, for example, and the baselines, one of the main components in my humble opinion. So if you look at the trend cloud, we did reclaim this trend cloud on the 6 hour, and we've had this cross up event holding. It started to get bearish when we came out of the 236 here and reject off of the super trend level, the bearish super trend. We wicked off it twice. We're currently coming up above this super trend, switching it from bearish to bullish if we come above that level and close candles off it again. This is your third hit to the high level though, so just be aware that this is the third time you are coming up to this level. Okay, so if we can see this close with conviction above that 236 level, then seeing this come up to the upside more is a possibility. The cloud starting to shift in a manner here on the 6 hour. It's been seeing some better days in terms of thickness, but it is starting to curve in a manner here on the 6 hour time frame. If we go to the 12 hour as well, let's go take a look at the 12 hour time frame. Also had a candle close just above the cloud. The cloud went flat and did not curve, which is why we removed that curve. So the thinning cloud insinuates a potential reversal or expansion. So this is what the trend cloud is about, a volume weighted cloud formula which expands and thins according to the amount of volume present in the asset. Price tends to gravitate and retest the cloud as a point of resistance or support. Thick clouds represent strong trends, thin clouds represent weakness or consolidation points. Keep in mind when the cloud thins, a potential expansion or reversal is in. So this could be the expansion we are talking about to 32K based off of the consolidation noise that we had here. So is this the entry point for that? You had the 12-hour cross-up event that had you at hello still despite the consolidation here back on Tuesday. Are we going to see this breakout here above this level? It looks like we're currently getting above the zone here. And let's look at our oscillators. Oops, sorry. It's NASDAQ stuff. All right. Nice, getting a little bit of a pump here. Pretty massive pump. All the way up above 31K now. Let's go to the daily time frame, shall we? Daily time frame starting to come up here in a manner and meandering slowly, starting to insinuate a play, a wind-up pitch perhaps. The MACD is not crossing over the threshold of cross up on the daily just yet. The Williams is not coming down as thick as it could for after the alarm, which is suggesting a potential double top idea on the daily time frame. If we look at the lower time frames like the 22, let's go to the 22 real quick. 22-hour is you had hidden bullish divergence on the money flow back here. Whoa. So you had hidden bullish divergence on the money flow back off of this wick here. This hidden money flow divergence and the RSI disparity here insinuated upside on the 22-hour time frame. Interesting to note. And then we watched this come back and surge out and play some games, and maybe these games were to scare people out for this breakout that we're about to see, perhaps. And is this money flow coming back in on the 22-hour, suggesting we are going to rocket here? Let's go see the 12-hour once again and start to see, is there volume behind this move. Currently there's not much volume. This is not a vector candle on the 12-hour time frame. Let's go down in the time frames to see where that is. The money flow is holding with the RSI here, slightly above the RSI. If it goes much higher and gets a sell-off wick here, you could be seeing a downside event. The Williams, nothing interesting, hanging out around the 50 average level. We go to the 6-hour time frame. We're getting a blue vector candle. This blue vector insinuates a stop hunt until it turns green. It's not volume of the green caliber. This last green one had a sell-off. So if we get sold off, this bearish trend will hold. And once again, we did talk about this third hit to the high. The power of threes is a thing. You can YouTube it yourself. What is the power of threes? It's generally where reversal points are had. So either you have this breakout with conviction and closing above these levels, or it's going to start fading and give you a juicy short opportunity. Let's look for the kind of divergence that we might want to see for that type of short opportunity. We had previous bearish divergence on the money flow and the RSI back here. You had lower highs. Wait a minute. Back here, you had higher highs on the bearish divergence there. So we're going to see if, where is this? Currently you're having, if this 6-hour even closes above here and then this money flow, but chances are if it breaks the super trend, then it's going to continue with the next candle and then cause this to equal, keep going higher. All right, so let's take a look at the power of threes idea. Now we're getting some liquidity pinged in. We go to the 4-hour time frame. The 4-hour time frame is a vector candle. This vector is of similar caliber to this 4-hour candle here, which saw an intense sell-off thereafter. So, and the sell-off was of greater volume than the vector itself. So, and it managed to hold the range of the cloud. We also saw this 4-hour candle prior to this. We had the cross down event, which we gave the signal about back here on Thursday, and then this started to come down and round out here, giving you that 15-minute play, which we notified you about, the 15-minute wanting to bang you to the upside. Once again, this is what, where was it? This thing. This bullish idea of your shoulder, head, and shoulder idea, reclaiming that cloud in a nice manner here, was giving some sort of insinuation of scooping out of the zone here. This was a nice model, entry model of the cloud shift and the thin and the kiss, twice kiss and out. So that was a very nice play. I was working at the time when this London, and I was scalping NASDAQ at the time but I put this out as an idea, and it looks like it's starting to play out. Very interesting. So we came up to the 786 of this retracement path. We are getting some 786 retracement of that 31,100 level. Let's see what type of liquidity got pinged in here. Woo! Now we got more pinged in here. Let's take a look at what has been pinged in. So they come back and they retraced right immediately into that 12900x, like
fatality.
And they didn't give mercy. And this 176 million in 100x up the top here, they could come right back to this guy too. And this is why you see the 𝗥𝗲𝗍𝗿 of price. The 100x leverage traders cause the liquidity provider to swat them off like flies left and right as they're being attacked from both sides by these 100xers. So there's 194 million in 100x longs down at 30,835, and his partner in crime at 50x down here at 30,005. So it depends on who they ping in more of. As it stands, there's 194 to 176. They just cleared this entire 208 million of 30,970. Rip that guy.
Fatality.
And that's what she wrote for not paying themselves. So now we're getting this vector candle with more conviction above the range here. This 236 model of the bearish trend could be negated here. We're going to leave it up until the candle closes in 8 minutes. So we have 8 minutes for this 4-hour candle to close at 1 a.m. my time. So does it close above this level and start to put in a higher high out of this range? The cloud starting to shift in a manner here, insinuating you could be digging your path out here, kissing the cloud. This previous cross down event is now starting to cross up and give you the helix. If it closes with that helix intact in 7 minutes time, you could be seeing a continuation candle out of this range. Let's take a look at the lower time frame and see how that's going. This is midweek reversal, by the way. Midweek reversal is Thursday. Take note of your weekly trading cycle. You have false move Monday, Tuesday, Wednesday, the play for the week, which in this case was sideways gobbledygook with a lot of upside and downside plays, and then Thursday midweek reversal after being shifted to the downside. So the shift to the downside at the end of Wednesday was suggesting that if you reverse, you could reverse to the upside. This hourly cross up event had you at hello as well. So getting the candles, this is what you like to see on Momentum Master. Even if I'm not streaming, I'm not your guru, I'm here to give you information which you hopefully can take to be your own guru. And this is where you can take a look at this hammer closing above the baselines, and then the baselines cross up. That is your smooth as a baby's rear end entry right there on the hourly time frame. Now if you go to the 15-minute, it's going to coincide. So you want this confluence in your favor, and that cross up event with the thinning cloud was your entry model at 2 p.m. my time. So if we just mark this off in the charts and go to the hourly time frame, you can juxtapose this using vertical line tools, and you can see where these entry models presented themselves. Take a look. It started to, you had this thick cloud, rejection, and then right there you had this shift, and you would have gotten these dynamic alerts to your phone. If you used the dynamic alert system, it would have let you know about the 3 time frames being oversold and what they were and what it was looking at, and you could have put a bullet in the chamber and taken a shot and shoot to the upside for that upside play of the crossover event. It started to close, and even when you had these bearish overtones, they were still holding the baselines with the baseline separation showing the momentum in your favor. So at the bare minimum, you could have taken this for a smooth 3% to the upside. I was working at the time. Apologies if I didn't point it out to you, but that's why we have the dynamic alerts and these ideas intact for you. So once again, this is the third hit to the high within this range. Are we going to see a reversal if it closes beneath some of these levels? We got 5 minutes. Knowing when the candle closes is very key too. So if the vector is not a solid vector that closes strong with an engulfing move, if it has this sell-off wick implies harpooning like a whale, and they harpoon some liquidity and take it to the downside. And we show you that here as a narrative structure of what's actually happening in the candles here. You can see they're opening up shorts here, but they're also opening up longs. And where are they opening these longs? These green dots. So there's 194 million in longs opening up right there. So that guy is harpooned. That 194 million, they're coming back for this guy. This guy is going to get slaughtered because he opened up into a green candle. You know what we like to call those guys? Neophytes. So the neophyte trader right here that opened up 194 million into the breakout thinking we're going straight to 32K is now going to become a annal in history. So let's watch this go back to this guy at 30,820. If we don't see it in the, yep, they're just gonna come back as quick as they came. So this guy coming at the 30,835 level. All right, so we got 3 minutes for the candle to close. Are we going to see this close and maintain this level and continue higher? Green vector candle is getting massive volume here on the hourly, juxtaposing the length of these volume. Volume is your friend, and knowing how to compare the volume. This is much more volume than these previous candles. This is a massive amount of a surge here, if it can hold. Let's go ahead and run this again. Shout out to everyone here. Flawless victory. XRP is going crazy as you see. Could we be witnessing a failed bearish breakdown or delayed liquidation? 𝗥𝗲𝗹𝘁𝗲𝗱. Hey, I don't take pleasure in them. I take pleasure in the game of liquidity versus liquidity provider. It's all abstract to me. I don't know anyone personally, so you got to have a loser to have a winner. You got to have a winner to have a loser. So it's kind of the binary nature of the universe. You got to have good and evil, and we all have good and evil in our hearts. So anyone claiming that they're altruistic is a liar and a fraud. So yeah, we all have that sinister trickster character and the shadow self within our hearts as well. So how you incorporate it and embody it in a positive manner is important, and recognizing that it's actually us. This Ouroboros undulating price action snake is eating the liquidity of itself. It's eating its own tail. It's eating liquidity with its greed and fear, inducing traps, and we get to watch it. So it's all abstract to me. It's me eating myself. You know, the entire universe is that. We're at war with ourselves. There is no Ukraine and Russia. There is no Putin and Trump. We are all just mirrors within mirrors. It's the mirror conspiracy, if you ask me. We're all just embodiments of each other. So there's nothing to be sad about or happy about. We're all just finger puppets on the arm hairs of God. Sorry for that little aside, but that's the truth. So yeah, anyway, we're going to see where it closes in a minute here. 1 minute and 3 seconds. Are we going to see the 3 hits to the high? Rejection at the 706 again. Let's go to the 4 hour and see if that ATR super trend back tested to be true is holding. Let's go. Let's go, baby. Oh, well, that wasn't the one. It was the, what was it, the 15 minute? No, it was the hourly. Wait, so the hourly one changed or something? Wait, no, it was the 6 hour? Sorry, I'm getting flustered here. Ah, it was the 6 hour one, that's it. So if it go, so the 6 hour still has 2 hours to close. Interesting. So if this closes beneath this on the 6 hour, we still could be having a sleeper like dump based off this rejection wick. So this 706 is holding true, but once again the 236 of the entry model for the long is still valid. So you could start moving your stops up into profit. You should always be trimming as you go and have levels for take profits as you go as well, especially if you're on high leverage, because we just watched how that happens where they come back into these guys. Let's see if they came back into that that pool. They let that guy unscathed? I don't believe it. They're gonna probably come back to him in a minute then. 194 to 176. So yeah, this 194 at 30,835 is more of a interesting target than this guy as of this moment. So I would suggest they come back to this 30,824 and then start spawning some bullish divergence maybe off that with more shorts entering than longs. They previously freed up all these shorts that were waiting for up or for downside, and so now there is that imbalance to longs. You can go down here and see that there's currently 5.9 billion imbalance to long liquidity now, so they could just as easily come back into this. So unless the candles change with unless the candles have conviction with a solid shift out of the range, it could just be you know, range trading 101. So if we go to here, we did put in a higher high within this structure of this range. However, you have lower high, higher high, lower high, higher high. So you're starting to make the idea of coming out of this. Do we have bearish divergence on anything here? Let's take a look. No, not just yet. Let's go to the 6 hour. So those cross-up events are pretty powerful. You could just take them and hold them, or you could look for the double bottom. Double bottoms are generally your key to success, so waiting after the crossover on these higher time frames for another stab to the bottom, and then finding where that stab is. As it stands, I think they just liquidated that guy right now by coming beneath that ATR. Let's go see. Did they get him? I mean, it's all abstract little bubbles on my screen, so I don't know. It's Pac-Man eating pellets. That's it. Until it's somebody I know, I don't really feel anything to this number, 194. Not yet. So they still could come back to him. Let's see how you guys are doing out there. Alright, so there's interesting information. If nothing else, this automatically gives you back-testable information of strength and weakness. So as of this moment on the 6 hour time frame, you're still kind of in that bear trend, and this is not really a convicted move on the 6 hour time frame. On the 4 hour, we already broke the super trend, so it's been kind of a bullish play on the 4 hour chart. So the 4 hour has been more bullish than bearish as of this moment here when it broke it and held. And so overall, these crossover events are pretty dang powerful. If we go to, let's look at some oddball time frames, the 75 minute. There was some times I was checking out some random time frames, one being the 75 minute. I try to look for these broken time frames which have broken candle closes, which give you some hidden information, this divergences and things which aren't clear on the regularly traded time frames. One of them is the 75 minute. You can find these little cross-up event plays on there too. I was trying to find something that was back-testably true more often than not, but it had a lot of false signals, so I didn't include it. But a lot of times if you get that alongside these other time frames, you could get these big plays too on the 75 minute. Another one is the 45 minute. I tried to look at these intervals between the hour and after the hour and try to see if there's anything regarding that. So you got a higher upside close with, you see, and you had this double bottom. This is the fertile crescent with the rising sun. We talk about that double bottom, like you have like a sharp one and a rounded one, and then it comes out with the rising sun out from behind the mountains, and boom, you're taken to the upside. Conversely, you get the alarm too. You get these triple peaks or double peaks, and then the alarm, and then it dumps down. I wonder if there's a more landscape icon we could use, but I just used the alarm. I like the rising sun idea for the light coming over the mountains, because I thought this looked like peaks and valleys, and then there's like, you know, fertile crescent with water coming down, and then the lights coming over the horizon. So yeah, let's go back to, let's look at the 33 minute. Let's just see what that's about. Kind of broken. Huge vector candle on that time. That was massive. And so that's where the algorithm like shifts the price, and then when you know you're going to another range, you get this massive move that closes with conviction above a range, and we haven't yet seen it, so we could be holding within this range still. This could just be a liquidity grab to come back down into these guys, all these convicted guys waiting for 32K, impatient. It could just be those things. Always remember to pay yourself. We've seen it all too often how they come back into these pools. So pay yourself before you become one of these characters that I say fatality to. That's the moral of the story here, is that as it's paying, always trim off into momentum. I'll show you a play that I did on NASDAQ today, and I was talking to somebody in the Momentum Master crew about it. So we're gonna go into the NASDAQ real quick and take a play from the playbook of what we did and see. Look, so NASDAQ is also breaking out, but I'll show you the play I took today. So previously we had the PPI data that came out, right? So we're gonna go back to the 2-minute time frame, and so it did this like meandering and did a double bottom insinuating upside. We had some lower than expected unemployment numbers, and then we came out and reclaimed the cloud and shot to the upside. So I was looking for a run on this liquidity imbalance that shot up during the open here, and so I waited for that B wave retrace to the 618 and just took this one little play down here, and then I made a massive amount of gains just off of this, and I'm done for the day. Like, that's all you need. Like, just be frugal with what you got. Like, I don't need to take this, and I don't need to feel FOMO for missing out on this. The market will be there tomorrow, and this lightning bolt will be there tomorrow too. I'll find it on the other side maybe, but it doesn't matter. So that's yeah, just the lesson of like, get the conviction of what you see the confluence for, and then take it and then be done. It doesn't, Bitcoin takes longer to play out for whatever reason. That was a 2-minute scalp play, but that's why scalping is kind of cool too. If you're interested in that, we do have links to getting funded to trade NASDAQ for a relatively cheap cost. If anything, it's like a risk management video game. So that video game is with the coupon codes can give you like a $14 chance to test your risk management, because it's all about risk management ultimately. Can you pass the test? They'll give you real money, and you can be funded too. Yeah, so let's take a look what's going on as of this moment. So yeah, with the wick that came out of that, liquidity coming back into these 100xers would be at least the thing I would be thinking about as of this moment, would be to they got him,
Fatality.
and they got that guy. I told you, I mean, why are you gonna buy $194 million at the top of, you buy at a discount, sell at a premium. Repeat after me. Buy at a discount, sell at a premium. So yeah, I'm waiting for a more discount personally. I just don't believe that, and I don't want to be able to be in a monitoring it while I'm looking at NASDAQ too. So I'm just chilling like a villain, but it's still cool. It's cool to watch it play out. So 194 down, his partner in crime at 50x down at 30,500, and you got all these long liquidity bubbles. Here's a free one. If you don't have high block, you can look at coinglass.com/liquidation data, and you can see where the liquidations were in the last hour, the last 4 hours, and the last 12 hours. And then you can also look at the liquidation map, and they'll tell you across 3 exchanges where the liquidity lies and how many millions there are in shorts, and how many is shorts and how many in longs, and you can see where they would want to take it. And you got exchange liquidation positions, and there's a lot of there's 895 million. If they were to go down to 29.8, there's 890 or 772 million. If they go up, there's less. There's 380 million in total, up to 31.6. So it makes more sense that there's a larger pool down here. There's over $1 billion down at 29 even. So this little bar tells you how much liquidity is resting in total, cumulative, down here as opposed to here. So there's less longs to shorts, and this is on the daily time frame. You can change it to the 7-day, and even on the 7-day you have a lot more at 29.5, 1.88 billion. So it's just an interesting free utility that's similar to these noodles off to the right here. I call them noodles, and it tells you these liquidation levels. So is this tomorrow on the schedule? So you got false move Monday, Tuesday, Wednesday, the play for the week, which was basically range trading or accumulation distribution, whatever you want to call it. And then you had Thursday midweek reversal, which was to one direction. So they cleared the short liquidity yet again. Now, run for profit Friday is tomorrow. Is the run for profit to the higher time frame? In my opinion, the sustainable play to 32K has not yet been made because they did not sweep the lows yet. So it could be they're setting up for a sweep to the lows for run for profit Friday if the imbalance is truly to the downside. So interesting to note. Let's go take a look at this. We did close beneath the 706. Does this create a tweezer top with another wick and then continue lower? As it stands right now on the hourly time frame, you are getting overbought. You had hidden bearish divergence back here, but it did not play out, got negated. We're starting to get the MACD knocking on the door to enter the domain of the stochastic. This traverses different domains, and I've been pointed out by a member that it stalls out on that 0 level and then starts to come down again. And then if it gets granted, it gets granted with a fury to enter the domain, or it gets rejected like it did here and comes down. So this is a pivotal level on the hourly time frame for the MACD. The leading MACD is also an interesting thing which we put into the framework of -100 and 100. This thing is a very powerful tool as well, which you can add alerts to. If you were unaware, it doesn't say it on the website. You just go to add alert and you can add pump or dump on the time frame of your choosing, and when the MACD crosses, like it crossed back here at 2 p.m. my time today at that bottom, you would have gotten an alert like pump, and then you'd be like, pump and 3 time frames oversold, what's going on here? And you would have seen the baselines beneath the price, and you would have seen that pump on the MACD crossing the alert here, and you would have seen the double bottom fertile crescent with the rising sun, and started to see vector candles appear, 1, 2, and then 3. You get 3 vectors generally speaking, and then you saw this consolidation off the cloud and holding, and this was a beautiful view. And if you saw it on the 15-minute, that's what we put out to the group. You have this double bottom, and this picture right here, if you frame this picture, that is this is Bitcoin's local bottom. Take a look. You have an Adam and Eve double bottom, rise out, consolidation, boom, continue. And so this thing, you have this Adam and Eve double bottom, rise out, continue. This is the thing. This is what you look for. And this kind of inverted head and shoulders thing, this is Bitcoin's bottom. And I traced this price action before I knew it was Bitcoin's bottom, because this is what you look for. And in this case, there was rocket ships appearing because it was the bottom of the market, and that was what the rocket ships represent, and those played out at 15K. I traced this before I knew it was the actual bottom of the market. So we literally focused our attention on this image for 30 hours plus, tracing it in Illustrator for you to see. And this is what you see over and over again. The thinning of the cloud, you come up, you kiss the cloud, you continue. You kiss it and continue, or you hold with the cloud coming up to it, and then you get kisses off of it, boom, you're gone. It's a beautiful thing to see over and over again. Look at that. it's literally almost the same thing, right? Pretty amazing. So yeah, sadly I was at work at the time, so I only caught it back here, but before this came out, so you would have been able to get that kiss off the cloud, continue at least from here. Congrats to anyone that had the audacity to take it. So let's see what is going on. We did get the 3 hits to the high, but it looks like we are currently considering going higher. Let's see what the liquidity says, and we will bid you adieu from there. So we still have this guy up here at 31,122. He sniped the top right there. Nice. That's where you want to short. You don't want to be this guy longing the top. You want to be this guy shorting. So he took a smooth like percent. Hopefully he trimmed, because they might come back for this guy at 31,112. Yeah, and you could see to the right here, this black line is where we're currently at, and you could gauge off the arrows, or you could use that 𝗥𝗲𝗹𝗁𝗁 thing that I told you about, the liquidation data from 𝗥𝗲𝗁𝗁 liquidation map, and you could do the same thing, this current price and then which side has more liquidity, and guess, there's 85 million here as opposed to 39 million here. I would go down and get this 30,600 pool of 85 million and just think like a market maker, like you want money. Which side has more money? I'm going to go there. And that's how the market operates. It moves to the place which has the most liquidity. It doesn't matter if it's up or down. And you shouldn't care if it's up or down. You should just go where the liquidity lies. So as it stands right now, we have a vector candle that needs recovering. This previous vector here got recovered, and then it dumped out of the vector. So if it pumps, we're going to see another vector recovery. And what is a vector? Well, if you don't know how to do that, it's okay, because you have a vector fractal break imbalance fair value gap liquidity void indicator for free. And you can pause it and go back and see how they came back to that vector. That was that character we just saw get liquidated. So even if you don't have high block, that's the concept of what these fair value gap recoveries are. It came back down into this wicked, into this candle, which it came out with the passion on, to recover some of that liquidity of those over leveraged people. So this vector has yet to be recovered. So you could basically draw like a consolidation box from this right hand wick to this left hand wick of this candle. And that's all the math is doing when it turns these on, is it's looking at this right candle's wick and this left candle's wick, and then within that there was no trading in this zone, so this liquidity could come back to retrace. So coming back down to test this for support, quote unquote. I mean, support and resistance are just liquidity, buy side liquidity and sell side liquidity. This is sell side, that's buy side. They have to sell at a loss, buy at a loss. So that's the idea anyway. So does it continue higher? Let's go into the lower time frames and see what the the indicators showing. As you see, with everything is fractal in nature. If you see these baselines closing above the candle and you're getting rejections off the candle and you get the helix cross over here, this could be a fatigue on the 5 minute. Generally, like everything, you need at least 2 hits to the high to show that fatigue. We showed that for you on the NASDAQ just a moment ago. Like, you need that second hit generally into a fair value gap and down is where you like to see it. So if you're going to see that here, then you'd be looking for a fade into that region. Looks like it's all traded fairly on the 5 minute. If we go to the 1 minute even, the only fair value gap that exists here is up in this region, which is up at the 31.24 region, and that is also coinciding with $31.24. Yeah, so we can actually see the liquidity, and we can see that this guy at 31.112 is actually the liquidity they would be going for. So at 112, 31.112, so he's actually above the range. So they might wick up to him. Interesting. But the rounded top also suggests when you get rounded, this rounded nature on the 1 minute, you're getting the cross down signal. See how the cross down baselines above the price cross down, and then you get these like explosive entry ideas where if you're a scalper, this is why we say it's a scalper's dream. The baselines are ultimately be a scalper's dream because it expresses fatigue on all time frames for those swing plays, but also you could just take this for what it's worth to the downside, and you could just catch this into momentum and just be like, all right, smooth as a baby's rear end with that candle closing and the baselines above it. All right, I'll just take it. And then you just take for what it's worth, and you could just trim along the way, set your stop at break even, and you win even if you lose, as Jason Casper puts it. Win even if you lose, and then it could come down to this fair value gap, and then you basically take it for a cool percent down into the liquidity void. And that's how you scalp a quick 𝗥𝗲𝗹𝗁 on BTC on the 5 minute, and then you watch where this 5 minute is coming down here. You also had the baseline cross down. I got alerts coming to my phone, so you would have gotten this dump idea alerted to your phone on the 5 minute as the MACD, leading MACD crossed down on you too, alongside that helix cross. So everything's fractal in nature. You pick your time frame of choice, and you could basically have fun in the 1 minute if you want, as long as you pay yourself and set stops to break even. It should be like punch, you trim and guard, trim and guard. You punch and block, punch and block. Protect your entry at all times and trim as you go. And if you live by that motto, you'll basically profit. And you pick those pivotal points, the pivotal points and confluence and levels of fibs and everything like that, and then that's where you take the momentum for what it's worth. So this is also like an A, B, C continuation idea coming down into that void, and that's what you kind of look for if you see it. But we're going to see what type of liquidity is pinged in here. If somebody over leverages themselves, they put full brakes on and go for that character. We've seen it time and time again. So that's why you use a frugal amount of margin with a frugal amount of leverage, and then you could just be compounding like a madman. Yeah, so there's some stacked 100x guys down here, particularly this 100x 107 million at 30,007 something, and their partner in crime at 194 million at 30,508. So there's currently more longs to shorts, as we ascertained before. So are they going to do a run for profit to the downside after they fatigue some of these 100xers one more time? They always do it 2 or 3 hits to the high, so be aware it's rarely a V-shaped. We did get a V-shaped on certain times, but the V-shaped is not always the case. You do see some meandering around first before the moves play out. Here was a nice V-shaped, but it doesn't always play out like this. So please be careful. But even if you trim as you go and you set your stops to profit, you're pretty good either way. You have the money flow beneath the RSI here, suggesting that it could come back up. If we go to the 2 minute, 2 minute got some hidden bullish divergence. So the hidden bullish divergence triggered a stop hunt, and then maybe the money flow is going to come back in on the 2 minute here. You still have that cross down in effect on the 2 minute. Did you guys have anything you wanted me to look at while you have me? Let's take a look at the chat while we see. So it looks like it's going to negate that cross down completely. Let's go say what's up. Anyone in here? 3 people. Cool. Any questions, any comments, anything you want me to look at? Let's go ahead and look at the total. I think the total broke that 236 line we were talking about. So we were talking about total needing to break above this level. We said it needed to get above the 236 in order to be bullish, and it did. Same as Bitcoin, it got above that level. And did it do that with conviction on the 4-hour? Then total market cap did. So it could be, and it reclaimed this high level. So looks like the total market cap is getting a boost, and this boost is to this upside path. Are we slated to break to higher unknown territories? We are getting a nuke on total. That's interesting to note. And at the same time we're getting a nuke on total, does that mean that we're going to be seeing some run for profit Friday at some point? Let's go to the higher time frame and see what is going on with the total market cap. We do have a fair value gap over here at $1.21 trillion. We previously reclaimed this range, and we're starting to come up above this range high. And so if we come up back above this range high, there is a fair value gap over here in this drop down of total up at 1.211 to look out for as a fake out breakout if it does come down after that point. This bearish trend is negated, so I'm going to delete it as of now. Looks like it's that same way on Bitcoin, so I'm going to delete that here for now. We'll reassess. And let's look at the 15-minute. So you're getting rejected on Bitcoin, but total is going up. That means people are positioning into alts. Let's look at total 3. Total 3 is getting a large surge, so people are positioning into alts. Interesting. Does that mean that Bitcoin dominance is dropping? Yes, it is. So Bitcoin dominance is dropping, so people are taking profits on Bitcoin and putting them into the alts. Does that mean we're going to see alt rallies? We should be looking at alts right now. What are some alts that you're looking at? 𝗏𝗏, starting to break through to the zone we were talking about. We put it out to the group the other day. We were talking about 𝗏𝗏, 236 entry model. Boom, boom, gone. Take profit level reached. If you go to 𝗏𝗏 previously had rockets, and then they were doing a stop hunt. I'm not sure about this. Let's do this again. 𝗏𝗏 also getting some moves. BNB also getting some moves. ETH also getting some moves. Coming up to a zone we previously went up into. We had nukes that played out on that. Getting nukes on ETH now. Interesting. Are we getting nukes on Bitcoin? No. Strangely enough, everyone's taking profits on their longs here from Bitcoin and putting them into their alts by the looks of it. And this is why the Bitcoin, juxtaposing Bitcoin dominance with Bitcoin, gives you that clue about the dominance shifting. So now the alts are getting the surge, and this is what is the total is seeing this surge up to this region based on not Bitcoin, but the money coming back into the market for the altcoins. So take a look at your alts, look for the retrace and potentially some areas for taking profit. Let's look at the 6-hour on Sol. We reclaim these high regions. The next level to reclaim is currently where we're at. We're at that fair value gap range. There's another range high point here and here. Currently coming up to those ranges. Sol getting that play too. So we're seeing an altcoin rally and Bitcoin dominance dropping as we reach that 786 region. So the Bitcoin dominance coming down at the 786 rejection of the bullish trend-based fib. So this coming down suggests that the altcoins could see a sustainable move as Bitcoin goes sideways. I don't know. Maybe they're getting more confidence back into the alts. USDT dominance is dropping. We're talking about people getting kicked out into USDT, but the opposite is happening. People are inserting their USDT into the alts now, and this is giving you the rocket ship idea of something coming back up into USDT. Weirdly enough, we are getting into the 618 golden pocket retrace of this impulse path. If we go up to here, we're already on that. Let's just do a deep retrace on this. So coming back to the 706, but of this impulse retrace continuation. We previously had a 618 bounce there, so that's why I did it from here. It was a back tested level. So as we see the 12-hour kind of cloud dumping out here for a double bottom, interesting to note on the USDT dominance. What does that mean? Does that mean we're getting a sustainable, like this range is strong support move, and then so now it's gonna hold for Friday and then do a Friday pump on the alts as well as people position into the alts today? Are we going to see this break up to this region? Holding this 236 at 30,724 is the thing to look at now. Are we going to hold this or not? If we hold it with conviction on higher time frames, then we could be seeing some plays to the upside. The total getting above the certain level, that 236 already happening, and we're getting up into these ranges, possibly coming with more money into the market. And we saw that total 3 was taking the majority of that, not Bitcoin. So basically Bitcoin getting that profit taking and putting it into the alts by the fact that the Bitcoin dominance is dropping and the USDT dominance is dropping. People are taking profits out of Bitcoin and putting their USDT into alts, taking it as a sign of strength. As it goes up here, this means people are losing the dominance because what? Is that because they're getting kicked out or they're taking profits into USDT, perhaps? So they're trimming their profits into USDT, causing the USDT dominance to rise. We're seeing a sell-off here as people take their profits and put them into USDT. This is the three-dimensional chess of the markets and what the candles are doing right now. USDT dominance and Bitcoin dominance juxtaposed with the price action. So we're getting that C wave. Gotta trust the TA, baby. Trust the TA. Boom. Trust the TA. And you got that cross down event with that curvature we were seeing on the 2-minute. Yeah, baby. Yeah, baby. Yeah. Rejection after 706. Coming down to that C wave. And then but the Bitcoin dominance is dropping, so people are positioning into their alts, strangely enough. So they're taking the profits out of BTC, putting it into the alts because they see Bitcoin as holding certain levels of strength, and they feel that that could lead to larger range shifts. So you might be getting a preemption of what tomorrow may bring. You may have a surge up to this region and people are positioning into their alts, and money is coming into the market from total with that preemption in mind, particularly with the alts as they want to catch the play up. Bitcoin dominance dropping significantly. So was there some signal met off this like holding of the range, suggesting that we're going to finish with this range and go up? I don't know. Let's see what the Let's see what's going on here. Let's go see what little bit of happiness they came back to retrace into. They did come back to those pools we were talking about. That 107 million gone.
Fatality.
Yes. And you still have his character down here at 30,500. But with the Bitcoin dominance dropping, people are not so phased by this anymore, it seems. They're like positioning in their alts saying, okay, I think we're making the narrative to 32K anyway. I'm not phased by this, is what people are saying with their with the Bitcoin dominance and the USDT dominance dropping. This means they're putting their money into the game. Taking it out of Bitcoin, taking USDT, putting it into alts. So they're putting they're alt rallying right now. Find your alts and think about what alts you positioned in. Hopefully you should be taking some gains off the table into USDT because the USDT dominance is looking to rise. If we look at the DXY, let's see what the DXY is doing. We're breaking that one level. Wow, the DXY at 99. So the DXY just bleeding out. Let's go see where it's going from this point. We have a deeper retrace level at the Hail Mary play of the 1618 of the bearish trend-based fib level that we could come to at 99,545. So as the inflation tapers and the dollar is weakening, this is giving the Bitcoin the possible strength that people are sensing to put position in their alts. Alright, so let's go back to the retrace idea into the liquidity void. We talked about it going into the void. It did. Did it recover everything? Perhaps not. Coming back into that 500 level. Does it have the strength to hold this 236? Or is it going to come back into these characters as if nothing happened? Even if it does that, it's showing attacks continually to the shorts. Either way, this play is a successful play. Scalp given on the live with that 706 rejection idea and the cross down event confirmation. It did give you a little bit of sweats, but it played out. Alright, so do you have any questions? Anything? Anything at all? So the 15, let's just actually go back. I want to have this still remain. So we're going to go back to the 15 minute and see what is the 15 minute going to do. So then you watch for this cascade of the time frames. We saw the 5 minute cross down and we say, well, is it going to make its way to the 15 or not? And so far we haven't seen a candle close, but in 5 minutes you watch that close, and if this closes with this 15 minute cross down, then you have then succeeded in bringing the 15 minute over to your side, and this scalp could turn into something like this. So it's all about monitoring the baseline crossovers with the price action and seeing this sign of fatigue here where it failed that first baseline led to this one possibly coming down too. And so, you don't know it's going to do that at the time. You have to just take it from even the 2 minute. You could take it all the way back from here, from this cross down on the A wave, and then you're just seeing the failure at these baseline levels, and then that suppression with the baselines gives you the insinuation of more downside. And so that's how you trade liquidity and momentum together. It can be a force to be reckoned with, especially if you come outside the Keltner channels here and then you like to gravitate back towards it. Yeah. And this is why you can do stuff like this on huge assets like NASDAQ. So NASDAQ in one 5 minute candle has more volume than Bitcoin in a single day. So this moves very volatile and very precise on a lot of these bounce levels, and these crossover events and these cloud kisses do play out. So it's a thing. It's a thing that's more accurate with the indicator these days. So worth taking a gander, if nothing else. So are we starting to see this rounding out and reclaiming of this super trend? This 2-minute super trend is holding in a manner here. So this could just be a ABC-ception, they call it in the Discord, to come lower. All right, so one last look at the liquidity and we will bid you adieu. So I don't want to project necessarily that far in the future. It's something to note that the alts are seeing a rally here and Bitcoin dominance is dropping, with USDT dominance dropping, suggesting people are positioning into alts. So what does this mean for the market on Friday? Are people going to see a surge up in the idea? This rocket ship on the USDT dominance also could mean like an overall dump, but why would people be positioning into alts if it's going to dump? It gives me the insinuation that people know something I don't in terms of it going higher or something. So that is just an interesting thing to note on the total market cap versus and the Bitcoin dominance and the USDT dominance. Add these to your chart and juxtapose them, and then what is the dollar going to continue dumping down to? Interesting. All right, ladies and gents, that's what I have for you. So you got to see where the 6-hour closes. I've been recently like digging the 6-hour and the 12-hour because I can't really trade as I work, but seeing this close in an hour and 17 minutes, is it going to close above this 236 or not? If it doesn't, then we're just range trading going sideways, just an average another day in sideways land from basically 21 days in sideways land. So if we close a candle beneath this, then it's nothing to be excited about just yet. We're just trading in the range. And then how do you get that range? Well, you could also use fixed range volume profiles. And how do you get those? Well, you have this here. You could just take it from 2 clicks and it'll give you your point of control. We held the point of control and surged up. So this reclamation of the point of control could be what is causing the bullishness nature as we hold the equilibrium. You can also get the equilibrium using a regression trend tool, and you could also use that with 2 clicks, and then that will give you a range and show you the equilibrium with the dotted line. It also happens to coincide with the point of control, and so we're currently holding the upper channel. This is in a premium range. Not interested in longing this at all. Technically, I'm not interested at all in the range thing. I want to see a liquidity grab down here for that swing play. Still, personally, I think it still could happen. The market likes to fake you out, so just always, that's why I say always pay yourself. They could just have a sweep of the lows one last time and then be gone. We do have that liquidity on the monthly time frame to insinuate it. Need I remind you, down here, you know, we said it was like 70 billion or something, 60 or 70 billion down at 29.4. Just a thought-a-roo. As Bitcoin dominance drops, the people that remain fixated on Bitcoin could be the targets as they have fun in the alts now. So we could be shifting our attention to the alts and looking for alt continuation plays. Maybe alt rallies are the thing. One thing I want to point out that I pointed out in text form is waves. Waves generally does like a weird play to the upside prior to all of this as a wave hello to get started on some sort of move, or if you will. So before we had some move to the upside, we had these surge in waves, and I don't know what that means, but they have these algorithmic like nods or handshakes for these players to do. So look at if waves is pumping, then it means something could be inbound for Bitcoin. All right. Well, that's all she wrote, folks. We're looking to see if this 15-minute cascades from the 5-minute and seeing if this cascades to the downside with the cross-down event. If this candle closes in the next 14 minutes with this baseline intact above the price, then this is how you watch the cascading of time frames from the 5-minute on the live that we put out here, and then watching this C wave play out and then seeing if it continues with the 15. I have no idea what it's going to do. I'm just following the momentum and trusting what the indicator says, and then basing it on the fair value gaps that appear, which you can also use for free using that fractal break imbalance idea. All right, that's all she wrote, ladies and gents, and that's my story, and I'm sticking to it. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we will catch you on the flip side. Peace.